Good morning to everyone. I would like to welcome you all to this session of BONARD's Student Housing webinar series dedicated to our knowledge for most sought after student housing markets. Although usually webinars of this format are focused on cities, today we are focusing on a country. My name is Filip Sylvestr, and I'm Business Development Manager at BONARD, and it will be my pleasure to share with you our insights into the German PBSA market. The session will start with around 15 to 20 minutes presentation, where we will go over the standard indicators such as demand, supply, pipeline, rent levels. And then we will follow up with around 45 minutes panel where we have distinguished panelists representing various industry stakeholders. During the session, there will be two polls, and we would appreciate your participation to get the sense of the market sentiment. You can also reach out with any questions or requests via the Zoom chat at the bottom of your screen. For those of you unfamiliar with BONARD, we are a market intelligence and strategic development firm specialized in rented residential asset classes, including student housing, co-living, build-to-rent, service departments, and senior living. We have over 15 years of experience in the market, collecting over 1,000 unique sources that our data specialists analyze. Over time, our team grew to 90 people, now based in Europe and China. Our in-house database for student housing entails information on over 2 million beds, with over 300,000 beds in the pipeline, across 267 markets. We participated on over 700 projects providing location assessments, consultancies, analysis, and underwritings. Our client base includes leading investment management companies, developers, operators, and lenders in the rented residential field. Within our city webinars, we have already covered Milan, Madrid, Warsaw, Lisbon, Greater Paris, Amsterdam, and now we will talk about Germany. We hope that the following presentation and data will help you have a better understanding of the market dynamics and serve as a base for the subsequent panel. So without further ado, let's dive into the presentation and explore as well as understand in further depth the German market. The data and insights that will be presented to you are based on BONARD's in-house and in-field research, as well as conversation with the local players. It is important to mention that the majority of data and KPIs will concern the 43 biggest cities that we currently cover in the country. Within those cities, there are over 1,700 assets with more than 230,000 operational beds, around 28,000 beds in the pipeline, and over 400 universities and colleges. Starting off with the demand, around 460,000 international exchange students attended German universities in the last year, which is a new record. Germany has thus overtaken Australia in the list of most popular countries for students and now holds third place in the global rankings, with the USA and the UK as the leading countries. As the institutions in the UK have not yet announced the numbers of students, the number 770,000 students is only an estimation. For other countries, those are the official statistics. Germany's policy anticipates an increase in international student enrollment. Currently, studying in Germany is mostly tuition-free for foreign students, regardless of their nationality. Moreover, the German Federal Ministry of Education, in partnership with the German Academic Exchange Service, has launched a program to recruit international students and graduates, preparing them for roles in the German job market. Supported by 120 million euros from the Federal Ministry of Education and Research until 2028, this initiative aims to help international students academically and support their integration into the German workforce. When it comes to the trend of the total student growth in the country compared to the international student share dynamic, Germany has overall seen growth in the total and international student populations, with over 2,900,000 total students in 22-23 academic year and almost 16% internationals. The total student population is growing slowly at only 0.5% year on year. However, the international student body has seen a much faster growth of 4.1% by 5-year compound annual growth rate, and an increase in share of 3% over the last 5 years. One reason for this development is the decline of number of births in Germany between 1990 and 2011. The impact of the decrease on HEIs and subjects varies from region to region, as an analysis by the Center for Higher Education shows. Germany's federal states with the highest losses are North Rhine-Westphalia, Baden-Württemberg, and Lower Saxony. In contrast to the general trend, private universities were able to significantly increase their population of first-year students, whereas the state-run universities experienced substantial losses. In response, the government has prioritized internationalization as a strategic objective to attract and retain talented students from overseas, aiming to bolster the economy and society. We have also benchmarked the most popular student cities in Germany, providing a basis for comparison regarding the growth of student populations alongside the proportion of international students. Promising cities for student demand include Berlin, Munich, Aachen, Erlangen, Dresden, Potsdam, and Bochum, with above-average growth rates in international student populations. Predictably, larger German cities have a greater number of international students. However, Aachen stands out with over 27% international students and notable growth for the past 5 years, exceeding the national average level. Erlangen and Potsdam show potential with over 11% of 5-year growth compared to the national average level of 4.1%. This indicates a growing preference for these cities among international student demographics, likely driven by their academic offerings, research opportunities, and quality of life. When it comes to the demand, Germany also stands out for the significant number of participants in the Erasmus International Exchange Program, attracting a distinct group of international students who choose Germany as their destination for academic exchange. Germany ranked as the 4th largest host of international degree students worldwide in 2019 in the pre-COVID-19 period. During 2022, there has been a surge in exchange program participants traveling to Germany compared to the pre-COVID-19 level. This increase highlights the resilience of exchange programs and illustrates interest among students in cross-cultural experiences and academic opportunities abroad. In Germany, Baden-Württemberg has the highest number of Erasmus students from abroad, followed by Bavaria, North Rhine-Westphalia, and Berlin. As we can notice, Germany is a popular destination for international students. When examining the demographics, India emerges as the leading country of origin with over 42,000 students. Notably, there has been an uptick in the number of Indian students in recent years. Following closely behind, China contributes more than 39,000 students, although these enrollment figures have experienced a decline for the 2nd consecutive year. Concluding the top 5 are Syria, Austria, and Turkey, underscoring the diverse array of nationalities comprising Germany's student body. It's also worth mentioning that the North Africa and Middle East region have emerged as the fastest growing source of international student enrollment for Germany, experiencing a remarkable 58% increase over the past 5 years. When talking about supply within this market, there are currently 1,700 PBSA assets or student residencies within the 43 covered cities, providing more than 230,000 beds cumulatively. The larger portion of the student housing accommodations are the public ones, with the 1,308 of these residencies versus the 424 assets that are private. In terms of the bed count, the allocation is distributed between 66,000 private beds and 164,000 non-private beds. Consequently, the private sector accounts for 29% of the total bed capacity. There are, of course, much more assets and beds in Germany. However, we cover 43 cities, which are the biggest student hubs. From the graphs for other markets, we can see the distribution of the private PBSAs versus non-private ones in the selected cities in UK, Spain, France, the Netherlands versus Germany. When it comes to room types in the private and private PBSA market, single accommodations predominate. Non-private sectors offer single rooms where bathroom and kitchens are shared, while in the private sector, the dominant accommodation choice is a single studio, self-contained unit where bedroom, bathroom, and kitchen are private. These single studios are favored by international students with higher spending capacity. This shift towards single accommodations responds strategically to the demand for cost-effective and efficient living arrangements. Additionally, the COVID-19 pandemic has underscored the importance of single accommodations, providing students with the enhanced safety and privacy, crucial considerations among health concern and social distancing measures. While the German private market shares similarities with the Netherlands, it diverges from mature markets like the UK, where unsuite options are more common. Unsuite popularity reflects a focus on cost effectiveness, especially in the urban areas where managing expenses is essential. Remarkably, almost 9 out of the 10 of private PBSA facilities launched in Germany after 2020 offer single studio accommodation, highlighting the strong demand for this type of living space among residents, and also emphasizing their appeal over alternative options. Private PBSA product would align with the countries that are more mature. It depends on the preferences of respective target audiences within different countries. When talking about offered amenities, there is a notable shift towards a modern high-price segment of the market. While laundry facilities, communal kitchens, and bike storage remain common offerings, recent trends reveal an increasing integration of amenities such as outdoor areas, multifunctional spaces, gyms, and dedicated study areas in developments launched after 2020. Also, more often, PBSA mentioned security measures and sustainable approaches. However, there is a notable decrease in the prevalence of communal kitchens, which can be attributed to the growing popularity of studio accommodations. Additionally, amenities like conference and music rooms are becoming less prevalent as developers prioritize amenities that cater to the changing needs and preferences of modern students. Overall, these trends indicate a strategic response by PBSA providers to meet the evolving demands of students in Germany and align their offerings with the expectations of the modern market. Regarding the private supply, as mentioned previously, out of more than 1,700 total PBSA assets or residencies within the 43 covered cities, the larger portion of the student housing accommodations are the public ones. The private PBSA market, however, experienced a significant surge in growth post-2010, with 70% of the total beds be constructed during this period. The market is characterized by intense competition and low market concentration. The 10 biggest providers collectively hold less than 40% of the market share, with no single operator holding a dominant position. This scenario promotes a competitive environment where companies differentiate themselves through quality, innovation, and customer service. The leading operators in the covered cities are Eilers, which manages over 4,000 beds across 14 assets, and the FIS, operating 3,000 beds across 9 assets. Their presence extends across the market throughout Germany, and the other major operators across the country manage 2,000 beds on average. Now let's delve into the projected future PBSA stock in Germany over the upcoming years, it is anticipated that over 28,000 beds will be introduced to the market, with 57% slated to be added by private stakeholders. Furthermore, 64% of the total beds in the pipeline are planned to open before 2026. Based on available data, the highest bed count in the pipeline is related to key market players such as Eilers and the FIS, each expected to offer more than 1,000 additional beds in the next few years. Furthermore, Basecamp Student, BHome, and Cube Life are poised to enhance their market presence, providing over 500 beds each in the future. The largest pipeline asset, comprising 1,000 beds, is associated with a non-private sector player, Studeren den Werk Bonn. On the other hand, the highest private pipeline offers 700 beds. Apart from this list, BONARD monitors numerous other projects in the pipeline, and based on our research, it appears that the market is unlikely to reach a relative saturation point in the next couple of years. While the market is competitive, there are still ample opportunities for new entrants. As discussed earlier in the presentation, Germany presents a robust market for PBSA development. It boasts one of the highest student populations and PBSA bed counts compared to other markets like UK, Netherlands, France, and Spain. However, it also exhibits a lower share of private provision rates within our covered cities, indicating a significant potential for growth. And considering the potential of the market and following successful property tours in Poland, Italy, Spain, and Canada, we have decided to organize the next stop of this initiative in Germany, specifically in Berlin and Hamburg. During the tour, participants will have the opportunity to see and touch up to 10 signature student housing assets in 2 days, get a better understanding of the market, network with local stakeholders, and gain insights directly from the asset managers. For more information about the property tours, please do not hesitate to contact us. And I would also like to draw your attention to our additional efforts focused on streamlining access to our data. Over the recent years, we have developed an interactive PBSA platform, which currently consists of all our in-house data and KPIs for more than 14,000 assets in over 267 cities, along with information about portfolios, transactions, yields, and pipeline. It is being used daily by key stakeholders and dozens of subscribers. And should you wish to get a demo access, feel free to reach out to our team. So to conclude the first part of this presentation, I really hope that you found the value in the data and research presented. The recording of this webinar, along with the presentation, will be distributed to all registrants in coming days and will also be available for download at bonard.com. And now, let us jump to our awaited panel discussion with key market leaders to engage in a fruitful discussion on the German market. So I would like to ask firstly our panelists to turn on their cameras and briefly introduce themselves and the company they are representing. Maybe we can start with the only lady on the panel, Siena, followed by Rainer, Lars, and Marcus.
Okay, thanks, Filip. So I'm Siena Golan. I work at the research strategy team at DWS in the real estate division. DWS is a global asset manager with many billions of assets under management globally, both in passive and active strategies. Within the student housing sector, we manage almost €1 billion worth, mainly focused in the UK and Ireland, but we have a significant presence in Germany as well.
Good morning, my name is Rainer. I'm with Amro Real Estate Partners in charge of Northern Europe. Amro Real Estate Partners is an integrated developer, operator, investor in PBSA and BTR co-living. In continental Europe, we focus on PBSA, started our journey in 2018 in Iberia, where we currently have some 2,500 beds in operations. and initiated the rollout of our continental European strategy into Germany and the Netherlands more than a year ago. Before joining Amro, I spent some 14 years in PBSA on various platforms, being involved in bringing some 10,000 beds to the market in Germany, Netherlands, Czech, and also in Austria.
All right, good morning. My name is Lars, and I've been in residential research for over 10 years now, and for 1.5 years with Catella. It is Catella's unit of Catella Residential Investment Management. And residential also means the modern living classes, which include PBSA. So in total, we have around 7 billion assets under management, of which more than 1 billion is in PBSA. And that is, it's a bit more than 11,000 beds in total. It's a bit of a higher number than Rainer just raised. So good point for Catella at this stage. We have the most exposure in Germany, but are also very active in other markets in Europe, Netherlands, France, but also Denmark, Austria, and Spain. And looking forward to the discussion.
Hi, and I'm Marcus. I basically am the head of European Living at M&G Real Estate, mostly spending my time on our Pan-European Living Fund and trying to buy assets across Europe, across living, but student obviously is an important sub-asset class for us. Historically, as a firm coming from the UK, we have a wide exposure to student in the UK, and are trying to translate some of our learnings there to how we invest into student in Europe, where the markets, as we all know, are slightly less mature, you can argue. And I'm curious to discuss with you if, let's say, the UK approach is actually the right approach for especially Germany, where some rules may not fully apply. So let's discuss this later on. I'm excited to speak to all of you and discuss about this exciting topic.
Yeah, great. Thanks. Thank you to all of you. And before kicking off the session with a more of a general questions for our panelists, we would like to also start with the first poll question. Therefore, please feel free to participate, and kind of the results will be announced after the first question is answered by our panelists. So what makes the Germany attractive location for PBSA developers and investors? Rainer, maybe you would start.
Yeah, pleasure. Well, I think there are a lot of factors that you have already displayed in your presentation, Filip, which starts from demand-supply imbalance, which is factored based on the attractiveness of Germany as a higher education spot, and so on and so forth. But I think what you need to take currently at the beginning of a new real estate investment cycle into consideration are a few factors that differentiate the attractiveness of Germany from other continental European countries as of now. And to start with, Germany has been hit hardest as regards the repricing real estate in continental Europe. This is one element which provides a lot of attractiveness for newcomers, especially on the development side, which is a little bit more a saddening factor for those who have built their portfolios over the last years and are currently struggling with refinancing issues, and also with the fact that capital values have taken a hit. Secondly, the attractiveness currently is described by a third consecutive year with double-digit rising rents, which is to a certain extent the spillover effect of COVID, which has delivered boosts in demand all over the place. And since the last visa bans on Chinese students have dropped a year ago, we are back on full steam, and the figures you just described underpin this. Another element to be taken into consideration, especially as we have seen interest rates rising significantly over the last 12 to 24 months, is the availability of KfW financing programs for higher energy efficiency standard products, which applies not only to new build, but has also some attractiveness for repositioning of existing stock and office buildings. And these programs make you eligible to financing on a unit basis. And from my point of view, to a certain extent, this is also the main factor why studio products in the German market are dominating. This is less a cultural thing or less a demand thing. This is just down to the fact that you can finance the vast majority of your construction costs through the just mentioned programs. They currently sit at an all-in interest rate of 3%, which is significantly higher than in Q4 last year, when they were at 1.5%, but is still below current market financing and delivers for a positive gearing. And last but not least, all the effects that we've seen in the market cycle have led to a situation that resi development, which has been the major competition to PBSA developers over the last 10 years, is more or less dead currently, which means you have access to opportunities to sites which you have only been able to dream of over the last 10 years. And taking all these factors together, downswing in land prices, highly attractive rental growth, plus availability of accretive financing, that describes currently a set of attractiveness for the German PBSA market, especially for development, which is, let's say, outstanding compared to other opportunities all over Europe.
Yeah, maybe to directly add to that, to the demand side in Germany, because Germany has a bit of a special feature also, that the shared flat market used to be quite big. And that is really declining now, at least for students, because it has shown more demand now from the side of young families, for example, who would have bought their own home for owner occupation in the past when interest rates were lower, who now are not able anymore to afford it or don't want to afford it anymore, and rather go into rental apartments. And these are the apartments of that size for young families that also would have been attractive for students to share accommodations. So students now compete with those group of people and now tend to go more into PBSA, which drives up the demand.
Yeah, exactly. And just to copy what the other two just said, I mean, I usually look at it from a pan-European context. And if I look at, let's say, the average yields for student housing in Europe, excluding the UK, let's say, and compared with the top 7 in Germany, then historically the spread was always, let's say, 60 to 70 bips, give and take. So Germany was always very expensive, but that kind of delta has now narrowed down to smaller than 20 bips, I guess, over the last, let's say, 6 months. So Germany is just relatively more attractive, because obviously it has still a lot of the underlying factors that are still constant, in the sense of strong demand, limited supply, growing international students, and so on and so forth. But then take a second angle, which is more like an asset class context, and compare PRS versus PBSA, for example, then that spread has been stable over the recent turbulences, around, let's say, the 100 bips. We can obviously now ask if that is enough or not, but you do get more reward for taking a more operationally intense asset class. So that's good. And then the third point, and that speaks for development, is that pre-Ukraine, let's call it, there was nearly in Germany no margin for developing. So standing versus development yields were more or less the same, because there was so little product, and people really, saw perhaps, 20, 25 bips spread. But that seemed very low if you think about development as a risk as well. So that has widened a little bit again. So all in all, and obviously as a core player, we tend to develop because of our high ESG targets. But repositioning is a similar play in the end for outstanding older stock. All these three, let's say, dimensions speak for student in Germany right now. And I think the key is now to find deals where you can make it also work for the developer to build. And again, there the cheap financing that, sometimes in a subsidized way may help. And obviously the decrease in land prices and so on will help the developer. And again, with that, I think we'll see much more activity this year compared to last year.
I think the final point that hasn't been raised so far is that the growth in demand has been in a student group which tends to need more PBSA. If you have growth in domestic students, a much smaller proportion of those students are likely to require purpose-built accommodation. They're more likely to look for accommodation in the private rented sector. So the greatest growth has been in the group of students which are most likely to need PBSA, and that's where we've seen a particular lack of supply in Germany compared to other European markets, particularly the UK.
Okay, great. Thank you all. I would like to ask our team to announce the results of the poll. So as we can see, 32% of our audience is directly involved, and or 13% is indirectly involved in the German student housing market, and not currently involved but interested is the majority, so 34%. So I would say it is great that we have such a panel today to discuss the specifics of the German market and explore it in depth. So moving on to the second question, not to maybe only paint the rosy pictures. Each market has its unique characteristics, and drawing from your experience in international PBSA markets, what are some of the main challenges and risks that individuals already active or the ones considering entering the market should be aware of?
I think on that point, there are three key risks. One is Germany on the whole is attractive, but there are markets, as you mentioned in your presentation, where the domestic population is likely to decline over the next 10 years. Given that domestic students comprise the vast majority of student numbers, if you have that decline, it's going to make a meaningful impact on student numbers. So you need to analyze where that's happening and whether the growth in international students is sufficient to offset that decline. So for me, that's the key risk. But the second is that it's an operational asset. So you need to work with the operator very closely. And if that particular asset is very specific to that operator, you are completely reliant on that one operator to make that asset work. So either you do your due diligence on the operator, you could be confident that that operator will make it perform, or you have to take the view that you'll get a more generic asset which can be exchanged between operators. So we mustn't ignore the fact that this is very much an operational real estate segment. And I think the third risk is policy. If you do find that you're reliant on international students to propel growth in student numbers, it's important to view the wider policy background, which, as we've seen in the UK and the Netherlands, can change quite quickly with a changing government. So those would be my top three.
Yeah, and policy can also, sorry, Artis, do you want to go ahead?
No, you go first. We're good.
Right, yeah, just to policy can also, of course, be regulation, which is sometimes in discussion, might be more in discussion when prices are increasing a lot, and more in some markets than in others. So in Berlin in particular, of course, it's more politically exposed, and regulations could be more on the agenda. A topic that we have seen in the Netherlands, for example, as well, where the WWS system is now to be renewed and changing. But I think the point of the international students as being the top clientele for PBSA product is, of course, a right and a good one. But I also think that the product is becoming more of something for mobile domestic students as well, because of the fact that the shared flat market is becoming tighter, and domestic students are becoming more mobile. So I think that also as an easy way to enter a market for a student just moving cities within Germany is also now becoming more important. And then, of course, the risk is also what we've seen in the past, COVID, where occupancy rates were just dropping, as we've seen for hotel, of course, as well. But similar to hotel, the recovery that PBSA took was quite significant, and the product is now really almost fully occupied in really most countries, as BONARD numbers also show.
Yeah, just to add, I mean, regulation, you cannot be careful enough about that in Germany. That's just what it is. Germans tend to be inventive in trying things out on that end. Especially if you're not under, let's say, proper student housing regulation with your asset, and maybe more seen as micro apartments that happen to be furnished and these kind of things, the more vulnerable you may be with, regulation targeting furnished residential. And there have been discussions, and there are ongoing discussions, which may make this field a little bit more difficult for everyone. So just be aware of that. And to add, I mean, I think what is important is really look of who are your targeted clients. Is it more the international ones? Is it more the national students? And for the international students, I mean, the good thing, obviously, is Germany is cheap for many international parents because education in Germany is for free in a way, right? So you can argue the share of wallet, or let's say the willingness to pay high rents because the course itself is free, may be there. But on the other hand, what do these parents in these kind of families look for? And often it starts with the simple questions: does the uni have courses in English? Not every uni has that. What courses are considered to be good at that uni, right? And are these target groups, if you look at India and China as the top two countries, let's say, of international students in Germany, are they interested in these courses and so on? So just make your due diligence very thoroughly, I would say. And then one perhaps small comment on Germans and German students. So Germans in general are a bit peculiar in the way how they think about their share of wallet, right? And that's also in PRS, and where that links to my opening statement of, are Germans very similar to international students? And perhaps, I mean, some of my colleagues here on the panel think differently, but my view is that Germans, if they can choose, would not like to have a gym in their asset, because their argument is there are 10 gyms within 1 kilometer radius. I choose which gym I go to as one element. And so the question is really, does every product cater for every kind of student? And that links then also to affordability, potentially on the German student side. So just think about that, I guess. And then the last one, and I can only, in a way, add to what was said before, the operator landscape. I mean, you saw the slide. I mean, it's a little bit of a nightmare. I mean, how can it be that the biggest operator only has 4,000 beds? I mean, it's so small, right? But that's the reality for now. That means for investors and for us, say on the core side, obviously, that this is a challenge, because depending on how you structure operations, if it's a master lease or, like a management agreement or whatever, the credit rating and the underlying business plan of the operator becomes more and more important, and you suddenly buy quite a big counterparty risk. That again, I mean, is an opportunity for value-add players who may also create platform value through creating their own operations. Obviously, also a very tried and tested area of creating value. But from a core perspective, this is more a risk. And perhaps an outlook in that regard, I do assume that as we've seen it or are seeing it in the UK to a certain extent, there will also be in Germany and some of the other European markets a time for consolidation. It will take another 5, perhaps to 10 years, but then we will see far fewer players and far bigger players emerging. So let's see who makes that race. But that's important to note as a side note.
Yeah, I think you're totally right, Marcus. The end of the last investment cycle provides a lot of opportunities now for consolidation. And the granularity is in principle the result of this last cycle, whereas I initially mentioned it was dominated by residential development. If you look at the number of beds and the time span of the PBSA sector in Germany, you are at around 4,000 beds per year that has been brought to the market, which is really nothing. Yeah. especially compared to the number of students that are floating around in Germany. I think we should not overestimate on the impact of internationals on the sector. I think the UK is more reliant on international students than Germany is, because we have in Germany more than 1 million domestic mobiles. And we are talking about, let's say, a country with a pretty high, comparatively high affordability, plus the fact that in a continental European comparison, rents in Germany, wherever you go, are pretty low. So even in Munich, where a studio currently sits at 1,200 to 1,300 euros a month all in, is compared to Madrid or Paris or Milan, even a bargain. And if you go more granular into Germany, you can significantly bring that down. As Lars rightly said, the attractiveness of the flat sharing segment is decreasing. If you look into, let's say, 4 or 5 years ago, the rental spread between a flat sharing offer and the PBSA studio was 50 to 60%. And that has shrunk down to some 15, 20%, depending on where you go. So financially, the attractiveness of flat sharing is no longer existing because of the pressure in the rental residential market for various reasons. Looking into risks, especially for those who want to consider going into the PBSA sector in Germany from abroad, I can definitely say make your homework. What people mostly underestimate is the complexity of the federal setup that we have in Germany. So building regulations are different, rental regulations are different in all 16 federal states. Most of the bigger municipalities entertain themselves and having additional regulation to be brought in place, which is a high recipe for a nightmare for somebody coming in from abroad who is not, let's say, an experienced or dedicated investor to the sector. And this is something I think you need to take into consideration as one of the main risks from my point of view.
Great, thank you. And from the available data, we understand that Berlin, Munich, Aachen, and Hamburg are the largest student housing cities in Germany. However, these may not always offer their most potential due to factors such as higher land costs, limited location options, and existing stock. So I would like to ask you, based on your knowledge of the market, do you consider any smaller markets as kind of hidden gems, or do you believe that the larger cities still carry bigger investment potential?
If I may start on this one, especially now, or at least for the next maybe 12 to 18 months, I would definitely overweight big seven. And why is that? If you look, for example, in Berlin, upper quartile quality locations were trading at north of 4,000 euros per square meter buildable area land price, end of 21. They're now down to 1,500, 1,600. So this massive downswing provides a lot of opportunity. And that's not only in Berlin, we see that also in Hamburg, we see that in Munich. If you look into strong secondary cities, and those are mainly in the southwestern part of Germany, except for cities like Aachen and Münster or Bonn, their land prices have been around 1,000 euros per square meter buildable area before the clash of the market, and have dropped to 600, 700. So the downswing of land prices from a developer's perspective is way more attractive in A cities currently. And I think there's a lot of opportunities to be harvested in a window of opportunity in the next months. And once this window might close, when development on the residential side normalizes over time, then I think it's the right time to blend in some B cities. And looking into B cities, there are still a lot. And if you look at your graph on international students, and I'm not saying you should only focus on these, but it's clear those who have an attractive position, and there are those hosting technical universities. So, for example, Aachen is known all over the world Lutz Technical University. The same applies to Karlsruhe, although Karlsruhe is shown here as a weaker spot, which is just due to the fact that the federal state of Baden-Württemberg had, for whatever reason, in 2018 introduced a tuition fee of 1,500 euros for non-EU's internationals, and this made Karlsruhe and Stuttgart, and to a certain extent also Heidelberg, drop in the international attractiveness. But from an EU or domestic perspective, these are highly interesting. They also come due to the fact that they are, let's say, economic interesting spots with expensive rental markets per se. And in these markets, PBSA products overachieve on rents compared to other markets where residential markets are not that strong.
Yeah, I have to agree with you, Rainer. So looking at Berlin in particular, you can see that the rent price growth for PBSA was the strongest over the last 3 years. And this is also because of the otherwise very tight housing market. So there's just a very general shortage of housing, which also translates into prices for PBSA product. And this is also due to people not being able to find housing anywhere or elsewhere compared to student housing. So also students who would otherwise look for just shared flats or flats on their own have to tend to PBSA because it's easier to get into the market in the first place. And then you can start from there, be in the market, and then maybe look for a shared flat or a flat on your own, or also stay in the PBSA if you have it. So in a way, in a sense, it also serves as a gateway market where PBSA is becoming stronger in, or has a positive drive out of this gateway functionality that it also provides, because it's just easy to access. Nevertheless, other markets are also attractive, and are attractive, as Rainer also said, in the long term. So it might not have the same effect right now, but still Germany is not centralized, and it has a lot of renowned universities in smaller cities too. So there's Heidelberg, there's Mannheim, there's Aachen, and in all of those cities that have an international pool, you will always have demand for PBSA, because you will always have internationals wanting to go to that university. So yeah, I agree. On the short term, it's maybe more the top 7, and also with a focus on Berlin. But in the middle and long term, also other markets really make sense.
Great. So when we were also considering topics for the next webinar, a key factor in the decision to focus on Germany was not only the data indicating opportunities for further development, but also multiple conversations with our partners since the beginning of the year regarding opening to new investments in Germany. And from those conversations, many people see that the opportunities are primarily seen through distressed assets. Would you consider this as the main driver of a new pipeline, or do you believe that the greenfield developments are a more attractive option? Marcus?
Yeah, let me perhaps just say something in that regard. That was also one of these themes at Experial last year. So there were people running around saying, yeah, we are going to do core deals, but at value add returns. So I don't believe in that, and I don't believe in that as an investment strategy. These things do happen, and hopefully they will happen to some of us. Good luck, but that's not how you can basically base a strategy on. So is there enough distress for this to happen more often, and to buy very cheap to then sell high? Perhaps. I mean, we see good potential both in greenfield developments and, let's say, existing stock, mostly then, let's say, refurbishments. Again, because of our high ESG targets, for us in general, it's much easier to build new. And we've been doing some student investments also outside of Germany with the fund that I run, and want to do more. And I mean, the one thing is that if you start building now, the beauty is that nearly no one else is doing it. So in 2 years, once your asset is done, you're one of the very few to come to the market. So that will even improve your performance then, likely, in the sense of rents that you can achieve. So I potentially would taking the core hat, definitely would more likely look for opportunity on the development side. But I do agree that there's also, a lot to do with standing stock, and then let's call it manage to green strategies, for example, or just a consolidation plays. So, but that's then more for plus to value add return profile likely. But the true distress, I mean, where should it come from in student, right? I mean, for existing stock, I mean, rents rose tremendously as we've seen, so it cannot be, let's say, top line / NOI. It can only be financing. And then, I think we've seen not many banks pulling the plug, let's say, so far. It may still come. Let's see what the central bank does at some point next month, let's say, and there's a lot of hope in that, I guess. But I'm not so sure if this is something that's repeat business. But perhaps the others disagree.
I'm totally with you, Marcus. I think distressed assets in this context can only mean picking up stranded office buildings, for example, and convert them into PBSA. Yeah? And I think there's no black and white. It's pretty much on how fast you want to grow and how robust your underwritings and your strategy needs to be. And there's a lot of pros for new build. And I think if you can blend into your strategy also conversions, it might help. But you need to take into consideration bringing a 70s, 80s built office building at current ESG standards. And I'm not talking about the regulatory requirements, I'm talking about the requirements that you need to meet to have a liquid product 5-7 years down the road. It means your repositioning cost per square meter is exactly the same as new build, meaning you need to buy the office building at land price. Yeah? And this flow of offer currently is pretty dry. This might change over time because a lot of office buildings will fall out of their life cycle for various obvious reasons over the next years, but building a strategy today as regards PBSA developer on picking up stranded assets, you might jump a little bit too short to be successful.
Yeah, I would largely agree with Rainer. I think the opportunity exists in theory. When you look on paper, you might see double-digit vacancy outside the CBD or in peripheral submarkets. Capital values have fallen by, in some cases, over 40%. But when you look at on a case-by-case basis, there are many factors that need to align to make conversion viable. As Rainer mentioned, the capital values of the office need to be exceptionally low to justify the cost of conversion. The structure of the building itself needs to be able to be converted to student. You need to have enough light coming in. You can't have too deep a floor plate. Planning needs to allow that. And you also have to have a location which makes sense. Students are very picky if they are going to pay high rents as to where they're going to be. So when you narrow down the assets which don't make sense from each of those factors, you end up with quite a small pool.
Yeah, that is true. I agree with all of what was said, especially having the same challenges of high ESG standards. And as Marcus said, it's easier to build on a green field than to convert something or to manage something to green. But still, yeah, as also Rainer said, when talking about conversions, and this is where the environmental strategy ultimately lies, to just not have more embodied carbon, or to not tear that down and have new grey emissions. That is a strategy that is becoming more important, or should become more important. And it might be associated with the same costs or even higher costs than tearing down and building new. But still, you don't produce new embodied carbon, and you have sometimes no other option than acquiring something that is already there, because the inner city location plots, they are occupied right now a lot by office that indeed might become less relevant going forward, and then the strategy might become even more present. But it has been the case a bit in the past as well. We have an asset that was converted in Pankow from an old office building to basically residential, but it's co-living in the end, so it still has a commercial character of use. So that's also coming back to the regulation, a topic then, that it was easier to do it this way because it was still commercial and you didn't need to change zoning laws. So there's sometimes it is associated with this as well. There's another asset in Marzahn, which is or was formerly used by just the food retailer, which is now a mixed-use asset where we were able to build residential and to reinstall the food retailer on the first floor or on the ground floor. So that can work, but it's partly really tricky, and you have to do your homework indeed to take care of the regulations and to know what can be realized in the end.
Okay. So before moving on, I would like to ask our team to share the second poll question. And moving on to when considering the market potential in Germany, this already has been briefly discussed during this panel discussion, but I would like to maybe ask Siena, what are your views on the price corrections and how significant do you believe they are in the shaping of the overall prospects for the market?
So if you look at the past 2 years of yields, there's been quite significant price correction in Germany, around 110 basis points if you believe CBRE's valuation series. But actually, if you compare that to other sectors, it's not as significant. And that's because there has been this weight of interest from investors in student housing in Germany. So I think relative to history, student housing is very interesting. What we need to consider is potential for rent growth in order to make total returns attractive relative to other European markets, where the absolute entry point might be slightly higher. But I think overall, if you look at the yield correction and the fact that it seems to be stabilizing, now is probably a good window of opportunity to enter at a relatively attractive capital value and take advantage of the opportunity there is in Germany of that very low supply relative to absolute levels of student demand.
Okay, great. So let's maybe share the results of the poll before the last and final question. Okay, so what do you think about the investment potential for student housing in Germany? The majority is moderately optimistic, some potential for investment, but with certain consideration. I think we can all agree on the majority vote on this one. We've seen this through various conversations throughout the year, that there is optimism on the market, but still a caution is warranted. So maybe to wrap up this amazing session, let's maybe look at the crystal ball. I'm sure our attendees would appreciate hearing all of your expectations regarding the investment outlook for the remainder of 2024 and beyond.
Yeah, I think moderately optimistic summarizes it quite well. That's also what we see for the entire residential market, especially for Germany, where we actually have a tipping point model. That's an probabilistic model that we developed at Catella, which indeed shows ambiguous results that can in the end be interpreted as moderately optimistic going forward. So we expect that capital values are not dropping further. It might be that indeed yields might see some more movement that is then, as Siena said, made up for by rent price growth. So I think there are good reasons and good signs to be optimistic, and we are actually also still active on the PBSA market, still looking for product that has high ESG standards and can be linked to still being affordable. So we are on the market, we are active, and we are optimistic going forward this year and also for for the next year.
Great. Siena?
I think I would echo Lars's optimism. The big picture is very promising. We've had significant correction in capital values. We still have a complete lack of product in the German PBSA market, growth in international students, and a residential market where vacancy is often less than 1%. So that suggests that there is a need to build more, but it needs to be in the right places and it needs to be tailored for the specific market, be that domestic, mobile or international, that requires that product in that location.
Thank you. Maybe Marcus, you can go next.
Happy to do so. I can also echo what the others said, perhaps with a little bit of pinch of salt. You know, if I look at other European markets, they also have rather attractive yields these days in similar situations. And some of them, if you go south, have much higher yields even in a way. And perhaps, you know, a similar underlying risk, one could argue, to be debated in another session, I guess. But so I mean, it depends on where you can invest and what you can do. If you're pan-European, then it is one of many markets, but still a relatively attractive one right now. That's why I'm also moderately positive. But it's not the only market for sure. But it's one market, I think, where especially in the long-term consolidation will be a very, very important driver for value creation across operators, and with that potentially also asset owners. And it's a very tried and tested market. If you look at traditional resi, where only very few big listed ones have been left. So we may see something similar in 20 years or in student housing. So let's see. And that's obviously exciting for certain types of investors.
Okay, great. And last but not least,
I'm extremely positive. And looking into the niche situation of PBSA in Germany, it has always been a development play and less of an investment play due to the granularity. For sure, there are opportunities for consolidation, but let's leave them aside for a moment. Yeah, the development play, if you look at the current players, is pretty much fueled by international private equity money. And for these type of investors, Germany currently is as attractive as it hasn't been in the last 10 years. Ingoing yields are north of 6. Financing is available. The supply-demand imbalance is obvious, and rental growth is obvious. So therefore, I'm highly convinced that Germany provides the highest opportunities in all of continental Europe, and with an expected recovery of the residential investment market over the next 24 to 48 months, there's a high probability of yields shrinking again and providing good returns for somebody who takes the opportunity to invest now into the sector.
okay. So to conclude this session, I would like to mainly thank our dear panelists for their participation and valuable insights, to BONARD team for preparing the data and presentation. As mentioned, the recording of this webinar and presentation will be shared to all of the entities, to which I would like to also thank for their interest and for joining. We hope you found the webinar useful and insightful, and we will be looking forward to meeting you during our upcoming events. Have a great day.